You're listening to the Economics and Country Risk podcast from S&P Global Market Intelligence. In each episode, our experts will provide you with the where, how, and when to make decisions that transform your business.
Hello, and welcome to our latest PMI-based podcast from S&P Global Market Intelligence. I'm Paul Smith, one of the economics directors in the S&P team, and on today's podcast, I'm joined by two fellow economists. Firstly, we have economics director Andrew Harker.
Hi there, Paul. Excited to be on another podcast episode. We're going to be talking about a couple of countries in the Americas, which are going to help us cover some of the key themes of 2023.
That's great. That sounds good. And welcome to you as well, Polly. Polly is an associate economics director in our team. A warm welcome back to you, Polly. I think it's your first appearance on our podcast for a couple of years.
Correct. It's been a while. Thanks for having me back.
You're
So
welcome.
in the second part of the podcast, we'll focus on our business outlook survey and firms' expectations for 2024.
Sounds good. We look forward to that. But like you say, that's the second half. To kick things off, I think we're going to do something that we're quite excited about in our team. We recently launched a new PMI for the Canadian service sector. We released that back on November the 3rd. Andrew, you're going to give us a brief overview of the survey and what area of the services economy the new survey covers.
Yeah, absolutely. So yeah, it's great to have launched some new data. It's always nice to get new information out there for our subscribers and people to look at. So yes, so for Canada services, I guess the key thing to note, first of all, on the coverage is that we're covering just the private sector. So we're not including public services here. We're looking at private services. And we also exclude the wholesale and retail sector. But that leaves us with a really wide range of sectors that we still cover across private services, including hotels and restaurants, banks, IT firms, management consultancies, even hair salons. And this section of the economy actually accounts for about half of Canada's GDP. So it's a really important chunk of the economy to be covering. And so should provide some really useful information for people who are interested in what's happening in the Canadian economy.
Yeah, that's something that's quite common across our services surveys. We don't cover government, public services and the retail sector, but like Andrew says, that's a big chunk of the economy. Andrew, obviously we launched this in November with October data, but that wasn't like the first month of data we've collected, is it?
No, it's not, Paul. We've actually been building up the history for quite a while now. So we started that survey back in December 2017. Which means we've got almost 6 years worth of data. So really a nice amount of history there for people to take advantage of and show how we've been tracking the service sector over that time. I guess it's worth mentioning within the Canadian services PMI, it's very similar to all our other services PMIs in that we're covering the same sort of questions. So we've got business activity, new orders, we've got employment in there, covering prices. So all the usual questions that you get from a PMI survey to help look at all the different aspects of the economy.
But there are some important differences still, isn't there, between a manufacturing survey and a service sector survey, such as the famous headline index that we use for manufacturing. And of course, we have something similar for services, but it's not quite the same thing, right?
Yeah, that's right. So for manufacturing, the headline PMI is actually a weighted average of some of the different sub-indexes from the survey. We don't do that on our services surveys. So the headline index, the services PMI, as it were, is just a business activity index, that single question, which asks about changes in business activity for companies from one month to the next. So yeah, there are a few different questions as well. Some of the questions in manufacturing aren't so relevant for services companies, so we don't ask all the same ones. But a lot of them are consistent. So whether you're talking about orders, employment, prices, etc., that's all on both manufacturing and services, which enables us to build a composite as well. So we bring the two together as a weighted average, and that helps us give that overall impression of the economy. And I think it's worth pointing out as well that with the addition of Canada services into the mix, we now have complete coverage of the G7 economies across manufacturing and services. So that's quite a good level of coverage there that we've got across developed markets. I'm going to turn the tables on you now, Paul, if that's all right, and ask you a few questions, or even if it's not all right, I'm going to ask them anyway. Because you are the economist responsible for Canada in our team. You're the author of the reports each month, and so it'd be really good if you could just give us a bit of an update, really, on the latest results for Canada and how things are going over there.
Absolutely, more than happy to do that. But I think you just mentioned that we're covering the whole of the G7 with our data. And I think one thing to note with the PMIs is because we've got that consistent methodology across different countries, it's quite a rare thing to have that kind of consistency across different countries. Of course, everyone produces things like GDP stats and things like that, but sometimes there are subtle differences between them. So this is truly comparable data providing from our PMI survey. So to come back onto Canada and the latest results, this year has really been about how the impact of monetary policy has really hit the Canadian services economy. Like most central banks around the world, the Canadian central bank has also raised interest rates quite steeply in the last year or two. And that's been widely reported by our panelists as a reason for why output has remained pretty subdued this year. Our composite PMI number, like you said, that combination of manufacturing and services, that has posted below the crucial 50 no change mark now 7 times in the year to October. And the latest number, the one we just released, was actually its lowest level for 14 months. So quite a subdued picture, both manufacturing and services in contraction territory. And I think just looking a little bit further ahead, as we tend to do as economists, firms are also a little bit worried about the outlook as well. Again, these high interest rates squeeze client budgets, leading to some people on the panel, some respondents raising the spectre of a potential economic recession in the coming months in Canada.
Yeah, that's a bit of a gloomy picture then, Paul. I guess for regular PMI watchers, I guess they won't be too surprised. It's a bit of a familiar tale with a lot of our surveys around the world at the moment in that sort of struggling territory.
Mm-hmm.
So I guess you've spoken a bit about activity there. As I mentioned earlier, we've got all the different sub-indexes across the survey. Are there any other sort of key themes that you'd like to pick out at the moment?
Yeah, absolutely. Again, and it's very similar across many, I think, developed markets around the world at the moment. Maybe US, maybe a slight outlier here, but price indices remain pretty elevated in Canada. They're down on the heights that we saw maybe last year. So a significant improvement in terms of inflation. But this is still remain above their averages, that what we would typically consider down to levels that we would think would be more consistent with a kind of central bank target rate of 2%. Looking at the data, just eyeballing the figures against official data at the moment, and you've got inflation rates stuck around about 4%. That's something to look out for, I think, from the latest surveys. One of the reasons why inflation remains stubbornly high is service companies continue to report to us their operating expenses have been driven up by higher wage costs. Employees are demanding higher wages to cover higher costs of living still, and employers are quite keen to retain staff at a time when we have quite a tight labour market in Canada. So recruitment activities actually held up pretty well despite that subdued kind of activity picture. Again, the composite data showing employment growth in all bar 1 month in 2023 so far. Firms quite keen to hire skilled workers if they can and fill some long-held vacancies that we've seen at their unit. So that's the picture in Canada. I've spoken quite a lot there, haven't I, really? So it's probably time to bring Polly into the debate. Now, I guess I've just spoken again there at length about Canada and some of the themes we've got there. Could we maybe apply some themes to say Brazil, one of the countries that you specialise in, Polly? I think activity's been a little bit subdued here as well in recent months.
Hi, Paul. Yeah, Brazil managed to grow throughout 2023 so far, but service is doing most of the heavy lifting and manufacturing is struggling. And that's the same we see in the PMI data. In October, private sector output increased, but only fractionally as manufacturing continued to drag overall output. But yes, while we saw an increase in new orders for service, we didn't for manufacturing. So factory orders continue to fall in October.
Yeah, I think it sounds like the whole global manufacturing economy at the moment, orders and output a little bit struggling. What about prices? What's the situation there on the price front?
Yeah, so now PMI indices, we have input costs and we have output prices. Private sector companies continue to see increases in both measures during October. It's pretty much services driven inflation, as restricted demand for goods is curtailing inflation there. But yeah, rates of inflation accelerated in October, but they remained below their long run averages. And it's in line with what the official data is showing. In September, there was a slight pickup in inflation, but that softened slightly in October.
How would that compare? I spoke there about the central bank target in Canada. What about in Brazil? How would that fit into? I know something like expectations can be so important as well in how we perceive target rates and things like that with central banks.
Brazil's central bank was one of the first to start increasing interest rates, and it did so very aggressively. The central bank was quite successful in curbing inflation. So in August last year, the central bank started to reduce them, and it has cut the rate ever since, in every meeting since. So in November, there was a reduction of 50 basis points, despite inflation exceeding the ceiling. And perhaps what's warranting interest rate cuts is moderation in inflation expectations in Brazil, which we do see in our business outlook survey, where firms in the manufacturing and service sectors foresee a stable inflation environment for 2024.
It's quite interesting that you're reporting there that the Brazil central bank is cutting interest rates. Big debate, of course, is when will they cut rates in the coming months. We seem some way off that kind of thing and across a number of markets, like I say, in elsewhere in the world, but Brazil seems to be a little bit ahead in that cycle. I think the one thing else that I'm going to pick you up on there was about this business outlook survey that you just mentioned. What is that? It's a different thing, right, to our PMIs. It's a different kind of set of questions, but from the same panel, right?
Yes, we do survey manufacturers and services firms in our PMI panels, and we basically ask them to provide their assessments for the year ahead on a number of measures like hiring intention, investment plans, and inflation expectations. We use net balances to indicate degrees of optimism or pessimism. And yeah, we have data available at the country level. We have aggregates as well for global emerging markets and the Eurozone, for example. And just to note that these data are available with a PMI subscription package.
Fantastic. So I guess the key difference there, isn't the with the PMIs? PMIs tend to be about the current situation, albeit we do ask one question about future activity in them service, but business outlook is all about the future, the coming year. And of course, rather than an index, it's a net balance. So I think people would be really keen as well. We're recording this the day after the latest results came out for the business outlook surveys. What are the latest results showing, Polly, at the global level?
At the global level, the dominant message is that output sentiment is leaped to a one-year low. Sentiment particularly faded in the service sector, with sentiment at manufacturing is actually unchanged. So that suggests that the service sector is unlikely to be the pillar of global economic revival in 2024. And another key message from the latest results is that inflation is set to be sticky in 2024. And that, combined with high interest rates in many parts of the world, led to muted confidence around profitability, capital expenditure, research and development plans, as well as hiring intentions.
Yeah, rather subdued and gloomy-ish outlook for 2024 there at the global level. But of course, there's regional and sector variations that we can pull out of this data as well. Andrew, I think that's something that you've been looking into, right?
Yeah, I've had a bit of a look through the data. I guess one of the things that stuck out to me was kind of a differing outlook either side of the Atlantic, really. If you look at the picture in the US, it actually is a bit more positive than what we've seen globally. Polly mentioned the global picture sort of with confidence fading. That's not the case in the US. It's one of the few countries who actually saw their sentiment pickup from the previous survey back in June. And that was on the back of the best expectations for service sector companies since early 2022. So I think that's all feeding into this idea at the moment that the US is going to have a bit of a soft landing. So maybe a bit of a slowdown in growth, but not anything more serious than that. And that sort of confidence is feeding through into expectations around things like employment and investment intentions as well. So they're looking pretty positive for the US. Contrasting that over the other side of the Atlantic in the Eurozone, where the picture is a lot more gloomy and sentiment dropped to the lowest for a year. And if you look delving within the Eurozone, you see some of the largest economies really are driving that weakness. So the outlook in Germany was pretty weak. France sentiment actually dropped to an 11-year low. So really quite a lot of doom and gloom really around the Eurozone at the moment, and seeing a lot of potential for a recession, I think, isn't there? And that's, again, feeding through into expectations around some of those other things like hiring and investment, which are really subdued over in the Eurozone.
A good summary there, Andrew, I think, and what's going on at the moment. One thing I would note from what I saw of the data is, although we talk about the US kind of inflation has come down probably faster than a lot of other places around the world, I think people see a path to say 2% or something like that. Companies do remain worried in the US, don't they, as well, about inflation picking up again, and that still seems a common theme across the world, which I think Polly touched upon earlier on.
Yeah, Polly mentioned about how inflation's expected to be sticky, and I think that's borne out by the data. We actually have 3 different questions that talk about inflationary stuff on the Business Outlook survey. Staff costs, so what companies are expecting to do with wages. We've got non-staff costs, so these are other types of business expenses. So it might be things that companies are purchasing or utilities, those sorts of things. And then we've got the output prices net balance as well, which is what companies are expecting to charge for their products. And all 3 of those indexes either stayed the same or increased since the previous survey, which actually breaks a run going back over the last year or so of inflation expectations easing off. So I think what we've seen in recent months of where official inflation data has been slowing quite sharply in a lot of places, it seems to be from these latest data sets that's going to come to an end over the course of 2024, and the inflation is going to stabilize and potentially at higher levels than the central bank targets. And so I think we're going to get to a situation during the coming year where central banks are going to have to decide whether they're happy with the rates of inflation that it settles at, or whether they're not happy and want to bring it down even further, in which case they might have to go back and take more action on monetary policy.
Yeah, it could be quite the dilemma. I guess they've done the heavy lifting, bringing inflation sharply down, but now it becomes a question of, do you want to keep pushing down or risk pushing economic activity lower at the same time? That's going to be definitely something I think to watch out for in 2024. So I think just to wrap up, thanks Andrew, and of course to you as well, Polly, for the discussion today. Like I said, I think lots of food for thought as we head towards 2024. But just before we go, I just wanted to flag a couple of pieces of research that listeners might be interested in and looking out for from our team in the coming weeks. Firstly, I think if listeners would be interested in a deeper review of PMI developments in 2023 outside of obviously the countries that we discussed today, then do head over to our webpage and search for the 2023 PMI review report. I'm hoping a link could be perhaps placed in the description to this podcast, or alternatively, like I say, just go over to the webpage and search for that article. That will cover a wide range of countries, reviewing PMIs across the year so far, and offering just a great overview of the global economy in 2023, and definitely help set the scene for 2024, which leads me on to the second piece that's coming up probably towards the end of this year, around the start of next year, is what we think will be the most important themes to look out for from our PMIs in 2024. So it's our top 10 PMIs to watch, and that piece will provide a much deeper dive into several other areas to watch outside, again, that we've discussed today. We did something very similar at the start of this year, a really popular piece, and I think on reflection, it really did give an advanced steer on what was going to happen in 2023. With all that done, all that's left for me to say is thanks again, Polly and Andrew, and for listening today. And we look forward to producing our next PMI podcast in the first quarter of next year.
Thank you for listening to the Economics and Country Risk podcast. Connect with us on LinkedIn and Twitter, and don't forget to subscribe to the podcast so you never miss an episode.